Let's stay with the markets now and where to invest your money in 2024. Maurice Gravier is the Group Chief Investment Officer of Emirates NBD. He's with us in the studio. Morning, Maurice.
Good morning.
Reading your investment outlook for this year, and it's not gloomy, but it's fairly restrained. Modest returns, you say, and high volatility. Explain.
Oh, yeah. Last year we called 2023 the year of unpredictability, and there were lots of questions. And 2024 is going to be about answers. So our central scenario is not adverse. We expect a soft landing, growth slowing enough to contain inflation. So there will be rate cuts, but it's not a recession. The issue is that since the last year's year-end rally, this has become very consensual, and it is partially priced in. So we expect low expected returns because it's partially priced in. The upside potential is not huge. While this consensus will be questioned. It will be questioned by data. We have seen last week, the US job report, which was spectacular. It will be questioned by data, by elections everywhere, and by geopolitics, so hence the volatility.
Well, let's look at the bigger picture, the macro picture now, because as you say, it's brightening up. We've had the IMF just a week or so ago raising their forecast for global outlook, and the Federal Reserve, Jay Powell, very bullish on the US economy. Let's hear from Jay Powell. This was him speaking a few days ago, not in last night's telly interview, but when the interest rate decision came out. Everyone focused on what he had to say about interest rates and inflation, but actually on the US economy, he's very bullish. Let's hear from him.
I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth.
Great, strong growth. Which asset classes will benefit from this?
Again, the issue is that strong growth is partially priced in, especially for equities. We think that this year is more about, bonds will pay their coupon, more or less. We don't expect capital appreciation there. And with regards to stocks, they should rise in line with their earnings. So we are not negative, by the way, but we're talking about relatively modest return. There is no room for multiple expansion. We have a tendency to like more emerging market stocks. We like this almost every year than developed market stocks because the growth differential, according to the very same IMF, will be in favor of emerging economies looking forward.
So let's look at some of the thematic themes that you have in your report for 2024. Big section on India. Yes, it's the world's fastest growing major economy. They've got an election this year. Modi expected to get a third term. And yet, Sensex and the Nifty, the indexes, at record highs. Do we stick or twist on India?
We stick on India because this is the genuine emerging economy story, which is basically increasing the GDP per capita. And they start with still a low base. Of course, it's I must admit there will be volatility again because it's global investors' darling within emerging markets. But for a reason, because you have this dynamic of going from $3,000-4,000 GDP per capita to hopefully 6, 7, 8. And the Indian economy has very robust structural drivers of growth. And in terms of governance, it's also companies that are very, very well run compared to other regions in emerging markets. So we stick to it, even if we will have some volatility, of course.
Well, you say one of the investment tactics that you have is you talk about being cautious with some expensive and crowded asset classes, and you said there is a differential among names. So this is not a case of just buying the market, buying the Nifty or the Sensex. How do you invest in India?
Definitely, it's all about, and I would say in a broader view that India, we believe in active management for the year, this year and for the years to come. The last year have been all about mega top-down drivers, such as the Fed, such as the pandemic, the rebound, and everything. We think that looking forward, the leeway of action for central banks is lower, so they will less dominate markets, which means more differentiation. The growth will be slower, and if you gain market share, it's better. So we believe in selectivity, looking ahead, rather than replicating indices that have become arguably a bit imbalanced.
Okay. Another one of the themes that you have is industry sectors. I know you look in particular at AI,
Sure.
and you look at obesity drugs, which have been booming. But again, my question is, I get it. The time to buy NVIDIA was 2 years ago. The time to buy Novo Nordisk, which makes Ozempic, the weight loss drug, was maybe 2 years ago. How do we play it now, Maurice, in February 2024?
Sure. First, I must say to the credit of Anita, our head of equity, she was in NVIDIA and Novo Nordisk 2 years ago. With regards to AI, she thinks, because I will just relay her message, that now it's not the time to focus on enablers, which was these names before, but on adopters, the people who will benefit from AI. And because it's right that in AI valuation as a sector, you have implicit promises that will have to be fulfilled. And that's another thing that we expect in the year of answers. When it comes to obesity, frankly, it's a brand new category that has such a potential that we think it's not over. Again, markets tend to overreact on the short term to price in everything in the short term, but sometimes they misappreciate the longer term impact, and we're there for the long term with regards to obesity.
Okay, messages coming in now. I'm going to throw this one at you. Arnaud is a regular listener, Money Arnaud, and he's very bullish on Bitcoin in particular, and has reservations about fiat money. So that's that's the background to Arnaud. But here's what he has to say. All in Bitcoin, nothing is bullish. We have entered a debt spiral. The end of this scam is near. The end of the Fed. That is not the Business Breakfast House view, but I put it to you, Maurice. Your thoughts?
Well, if it is the end of the fiat currencies, we are in big trouble. Well, first, we do not advise on cryptocurrencies. We look at them, of course. We do not advise on them. We have some sympathy for the fact that it could be nice to have some currency you cannot print, and we express that through an overweight in gold. And the way we look at Bitcoin is valuation compared to gold, and it's an interesting animal. You know, these ETFs have been out, and since then, Bitcoin has dropped, which may sound a bit surprising. We're looking at it. We do not advise on it. But gold is a nice currency you cannot print if you believe in the end of the fiat currencies as well.
And I was looking at your tactical asset allocation matrix. Most of it is above my head, but about 5 or 6% in gold was how I read it. Is that correct?
Yes, absolutely. Depending on the profiles, we like some defensive assets that are yielding, such as money market funds. They work very well. You know, you'll get your 4.5% this year without risk. Take it. And gold for us is something that we keep we are looking at rate cuts, 3 or 3, maybe 4 from the second half of the year. This should be good for gold. We like gold for its geopolitical safe haven status, and also because it's a currency you cannot print.
Final word, Maurice, on our own backyard. The world's IPO boom market is in this region at the moment, Dubai, Abu Dhabi, Saudi Arabia, and others. How do we play that in 2024? What are the opportunities? What are the risks?
Well, first, the IPOs are in general of high quality. They are well received, and it's usually interesting, of course, do your own research and trust your bank for that. Within the region, we are bullish on the UAE, and now the UAE, and it's not because we are a UAE bank. You know that we've been neutral in the past for us. The UAE and to some extent Dubai in particular is deepening the markets with these IPOs, because it's not just about the companies that are coming to the stock market that you buy. It's also about the impact it has on the broader market and its perception from international investors.
Maurice, great talk to you. Appreciate your time this morning. Thanks very much indeed for being with us. The thoughts of Maurice Gravier. He is the Group Chief Investment Officer of Emirates NBD.
By 103.8.
Join the conversation.